All right, welcome everyone to our entrepreneur workshop today. Thank you for joining us. I see some new faces. I see some familiar faces. And we'll give it another minute or two for more people to log on. But while we're waiting, let's go ahead and participate in this virtual icebreaker. So while we're getting more people logged on to this workshop, if we can go ahead and just participate in this. So in the chat box, if you can go ahead and share your name. And if you've already started a business, the name of the business, the name of your business, or if you're joining us from an organization, what is the name of your organization, your role there? Or if you're planning on starting a business and haven't opened a business yet, what type of business are you planning on starting? And feel free for those of you who are existing business owners to include your business social media handles, website, etc. So let's go ahead and share that in a chat box. Take a few minutes to go ahead and do that. All right, we'll give another 30 more seconds. But again, if you just joined us right now, if you can go ahead and participate in our virtual icebreaker. And if in the chat box, if you could put down your name, name of your business, or if you're joining us from an organization, name of the organization that you're at and your role. And if not, if you haven't started your business yet, what type of business do you plan to start? And also, if you've already started your business and would like to share your social media, please go ahead and enter that information too. All right. Well, thank you all for participating in our virtual icebreaker. So for those of you who are not familiar with CIELO and who we are and what we do, CIELO, in terms of what it stands for, it's Community for Innovation, Entrepreneurship, Leadership, and Opportunities. A little bit of background about us. We officially launched in 2015, but we've been helping clients since 2012. We are a nonprofit organization helping aspiring entrepreneurs become business owners. And being that we are a nonprofit organization, all of our services are at no cost. We don't charge for what we do. We help you build and develop the entrepreneur mindset needed to help you achieve success. We provide the resources and guidance, and you provide the hard work and passion. So in terms of services that we do offer here at CIELO, we do have a small business development training program. We also offer monthly entrepreneur workshop series, just like this one that you're attending today. We do offer one-on-one small business coaching. We do have a client navigation team, which helps to support all of our current enrolled clients to business launch and even after business launch. We also have a microgrant program for current CIELO clients who have participated in our CIELO programming startup program. And we also aim to be a connection to other small business resources and services. So some upcoming events. This is an example of programming that we do offer throughout the year. We usually offer this about 4 to 5 times a year, but this is our CIELO Small Business Startup Program. Looking at some of the participants that are here today, I know some of you have already participated in this program before. And our next session is November 14th. Unfortunately, it's sold out today, but we will have others coming up starting next year. But essentially what this startup program is, it's taking a journey on the entrepreneur roadmap to business launch. This includes 6 weeks. It's a 6-week training program for entrepreneurs and startups. It includes 3 weeks of live classroom training and 3 weeks of one-on-one business coaching. Topics include how to pick a business name, advertising on social media, introduction to business financials, and much, much more. So if you're interested in learning more or attending a future small business startup program, feel free to email us at info@cielocommunity.org or follow us on social media, and you'll be informed of when our next session will be coming up. So some workshop reminders regarding today. We will be sending out a recap email to everyone who registered for this program or for this workshop today. So all of you here and even anybody who registered and were able to make it today, we will send a recap email by the end of the week. And within that recap email, we'll have the recording of today's session. So we like to send it out that way you don't feel like you have to write a lot of notes. So we definitely encourage you to all to write notes, but if you're trying to not able to keep up with, say, the presentation, we will provide a recording for that. Any information materials or presentation deck that we're able to share, we'll go ahead and include that on the email as well, along with the guest speaker contact information. And what we'll do today is our guest speaker will be presenting, but we will definitely hold a question and answer session at the end. So any questions you may have, we'll make sure to leave time at the end to be able to ask our guest speaker about your question. So real excited today to have our guest speaker, Daisy Ruiz from OC UnitedWay, where she is a financial case manager. And today's topic is Introduction to Credit. So credit is very important. It's very important on the personal side, but just as important on the business side as well too. So here to talk more about this topic is Daisy Ruiz. And Daisy, I'll go ahead and pass the mic on to you.
Awesome. Thank you, Alex, for that introduction. Good afternoon, everybody. I'm super excited to be here. Thank you to CIELO for, allowing me to be here and present for you guys today. So we will be going over just a general credit information session with today's presentation. So I will be sharing my screen in just a moment. And please feel free, if you guys have questions throughout the presentation and you don't want to forget, write them down, put them in the chat, and then we will make sure to answer them at the end. But let's go ahead and get started. So let me go ahead and share my screen with you guys. Okay, just making sure everybody can see it. We're good. Awesome. Okay. Well, again, once again, thank you for your time today. Welcome. I am the Senior Financial Case Manager for SparkPoint OC, which is the financial empowerment program run by Orange County UnitedWay, which is another nonprofit here in Orange County. I will be able to share a little bit more about the program and how we can hopefully be able to help you if you guys are interested. But for the time being, we're going to go ahead.
To an accident that was reported to us.
Are we good? I think we're okay. Perfect. But for the meantime, we'll just go ahead and dive in with the presentation for today. Alrighty. So today we will be talking about credit reports and scores. So as Alex mentioned, credit scores, credit reports, our overall credit health is super, super important, not only on an individual level, but also if we are creating a business, we're taking on this new journey of diving into this world of business and ownership. So it's really important just for us to understand how it is that credit reports work, what it is that goes into our credit reports, and how that affects our credit scores, and also just understanding the impact that it can have, again, both on an individual level, but also when we do decide to start a business. So credit reports. Today we will discuss credit reports and how the information in your credit reports can affect many areas of your life. Your credit history can affect your access to credit loans, jobs, housing, insurance, and other important services. Understanding your rights helps you know how to protect your credit history. So one thing that I always stress to all of our clients and our people that are able to come to any of our financial literacy workshops is that credit is something that happens whether we like it or not. Sometimes I've had clients in the past say, well, Daisy, I don't want to check my credit score because if out of sight, out of mind. However, having the knowledge to really understand how it does affect you and what goes into a credit report, which then transfers into your credit score, is going to be the key to having a good report and a good score. So also understanding that our credit, unfortunately, does affect a lot of areas in our lives. Like stated here, credit cards, loans, jobs, housing, insurance, even now to get your own cell phone provider, your service. The first thing they will ask you is, okay, great, got to run your credit, right? So it's really important to really understand how this all interconnects with our daily lives. So something I would like to try, and this is going to be a little bit interactive. One of the things that a lot of people don't really know is what exactly is on their credit report. So generally, whenever we ask someone, what is on your credit report, we get about this list about 13 these 13 things that most people will say is on their credit report. Now looking at this list, we can see it says your name, your age, arrests and convictions, your credit card payments, your income, bank receipts, cell phone plan payments, debt to income ratio, student loan payments, credit card limits, traffic tickets and fines, saving account balances, and debit card purchases. Some of these are correct, some of these are wrong. Would anybody like to take a shot and let me know at least one thing that they believe is incorrect and it's not on their credit report? Anybody want to take a shot?
Traffic tickets?
Yeah, correct. Traffic tickets and fines are not on your credit report. Anybody else?
Your arrest
Hey,
and
Daisy.
convictions?
Go ahead, Jason.
Arrest and convictions?
Correct, not on your credit report. One more person.
And
Eric?
someone in the chat, Jackie said number 3 as well.
Yes, correct. So yeah, those are not on your credit report. So what is on our credit report? It's going to be any identifying information in terms of the names that are associated with you, in terms of any addresses that have been reported to credit bureaus, and in terms of any phone numbers that have been reported under your name, and also any employee history. Okay. However, when someone looks at their credit report, sometimes there might be address that you lived in that it's not being reported, or maybe you will have an employer that you worked with for 6 months, a year, that will not be on your report. It is important to know that if something is missing that should be on your credit report but it's not, that should not be a reason to be alarmed. Generally what that means is that during your time period at that address or at that employer, you did not run your credit to try to get something, which is why it was never reported to the credit bureaus. The red flag does come in if in the event that something is on that report that you do not recognize. For example, if there's an address on your credit report and it's an address in Texas, but you've never been to Texas, you don't own a home in Texas, you never lived there, that would be a red flag. If there are numbers listed on your credit report that you have no knowledge of, maybe it's an area code from like Florida, you never lived in Florida, never had a Florida number, that should be a red flag. So then we have to do our due diligence to dispute this information off your credit report to ensure that there is no chance of you to fall victim of identity theft. Okay, so that's the big thing here. What else is on your report? Your debt and some bills. So you will, if you have any car loans, that will be on your credit report. If you have any credit cards, whether you have a balance on them or not, whether they are open or closed, that will be on your credit report. Okay. If you have any other personal loans or student loans, that will also be on your report. Okay. What other bills? If any of your like utility bills went into collections, that will also be on your report. So let's say we weren't able to continue paying our internet bill with AT&T, and unfortunately we stopped paying it, that went into collections. That utility bill for your internet will be showed up on your credit report as a collection. Okay. What else? Public record information, this kind of goes back to your identity, identifying information. So again, once again, any name that is associated with you, addresses, phone numbers, employment history, okay? You will also see your applications for new credit or other inquiries. So whenever we run our credit, when we use our social or our ITIN number to try to get something, we are running our credit, and that is considered an inquiry, okay? That history is then put onto your credit report. So every time you run your credit to try to get something, that will show up on your credit report. It's a good rule of thumb to try not to run your credit more than 2 to 3 times a year. The good thing about credit inquiries is that they actually fall off by themselves every year. So let's say I went to Best Buy October 25th, 2 years ago, right? So that means that today that inquiry will fall off by itself. So inquiries, it's not something that we should be too worried about, but it's also a good thing to keep an eye on when you do look at your credit report to ensure that your credit's not being ran without your knowledge, because that will also be a red flag of identity theft. Okay. Perfect. So with that being said, another important thing to note is that there are 3 nationwide credit reporting agencies. There's Equifax, Experian, and TransUnion. Okay. Each one of these 3 credit bureaus has their own report and their own score for us. Sometimes our scores and our reports will differ a little bit depending on what credit bureau you are looking at. The reason behind this is because there are some companies, some banks, that tend to use one of the credit bureaus more specifically compared to others. One example, just very quickly, of this is, for example, if a person goes to try to finance a car with Toyota Financial, Financial usually uses your TransUnion report. So that account will appear on your TransUnion report faster than it will appear on your Experian or your Equifax. So that can cause a change in your credit report and your score depending on the time frame that you pull it and look at it. Okay. But once again, these 3 credit bureaus, they essentially package up all the information that is sent by any person that you have a debt to, bank, lending agency. They put it together, they compile it, make a report, and then they will each give you a score. Okay. Perfect. So with that being said, what is a credit score? A credit score is a number based on information in credit reports. It predicts payment of bills and debts as agreed, and people with higher credit scores likely present lower risk to creditors. So essentially, a really good, simple way to see your credit score is just as a grade. So let's say we're in school, we always hopefully try to aim to get an A in whatever class we're in, right? An A is great. We want to be top of our class. If you have like a C in that class, you're passing, but you probably want to kick it up a gear, right? And then if you have a D or an F, that's really time for alarming. We need to get it together a little bit. So essentially, that's what a credit score is. A credit score is what tells the banks, the lenders, the creditors how good you are at repaying your debt. So this is why it's really important to take care of our credit score. It's what gives value to your word of I'm going to pay you back. Okay. If we have a good credit score and we go apply for a personal loan, let's say with Bank of America will be like, wow, Daisy has a 720 credit score. Her report looks good. She's good at paying her stuff. Let's give her this loan. Whereas let's say my best friend goes to the same Bank of America, tries to get a loan, but she has a 500 credit score and her report's not the best. Bank of America will be like, ooh, so sorry. I don't think we're going to be able to give you this loan. Or if we do, it's going to have a higher APR. There might be a lot more things that come tied into that, right? And especially if we are embarking on this journey of creating our own small business, this might be something we need to look at, getting a loan. So this will be another really good reason to make sure that everything's in line with having a good score. Okay. So who uses credit reports and scores? Financial institutions, some landlords, utility companies, some cell phone companies, insurance companies in some states, and employers in some states as well. as well as some state agencies or affiliated organizations. So as we can see here, this is a pretty lengthy list of different places, organizations, companies that do use credit reports and scores when determining whether we're going to get a service, whether we're going to get a loan, a product with them, right? So this, again, all just goes to say that our credit report and our credit score do get entangled with a lot of our life, whether it be on a personal basis or more on a business high-scale basis, okay? So having no credit report or score. If someone has never opened credit under their name, you are considered what we call credit invisible, okay? While there might not be nothing under your name and you might not have a score, you are considered invisible. So when you run your credit to try to get something, you won't have anything. That can be good, that can be bad, depending on who you ask, right? But however, it is important to know that this may result in you having a harder time doing the following. One, getting a credit or a loan, so credit card, loan, renting an apartment, getting an affordable cell phone plan, obtaining some jobs, specifically like higher end financial banking jobs, because if they're going to hire you to be an investment loan officer or someone who deals with wealth management, they want to ensure that you're able to take care of your own financial responsibility, okay? Also, turning on utilities without paying a large deposit. So this is actually something I can share that has happened to a couple of my clients that have moved out after college. They've never were told to start working on their credit prior to moving out. And they have called me and be like, Daisy, I just have to pay $100 to turn on my gas. And I'm like, yep, they probably ran your score, ran your credit. You have no credit. So they're probably like, ooh, what if we give you gas for this month and then you never pay us, right? So this is another reason of how it can affect our daily lives. But in a sense, while we can be credit invisible, and that can be good because we don't have anything bad on our report, it can also make it a lot harder for us to start cultivating that good, essentially worksheet, to be able to show people, to be able to show the banks, financial institutions that we are good for our word and that we will pay them back, okay? So with that being said, opting out. I don't know how many of you this has happened to. I think to a lot of us, you receive pre-approvals in the mail, right? You're pre-approved for this credit card. You're pre-approved for this car loan with Capital One. And specifically, this is something that happens especially as soon as we turn 18 here. As soon as we turn 18, we're flooded with all these pre-approvals. Well, the good part of this is not only do we kind of get an idea of what we can get, but we need to be careful with that. But if this becomes too much, if it's just too overwhelming, if you don't want to deal with all the junk mail, you can actually opt out of this. So you can opt out of receiving pre-screen offers for credit or insurance, either for 5 years or permanently, okay? You may still get offers based on other lists from other sources. So one thing that's been happening a lot is whenever we go buy something at the store, they'll say, can I get your email, please, to send you your receipt? And then we magically start getting offers from them. Oh, this is on sale. This is on that. So that's just an example of other sources. So you might still get pre-screen approvals through that. But as far as actual mail-in, there is a way to opt out. And you can also opt back in. But you can opt out of having a credit report. So if you guys ever do want to opt out, there's actually a website called www.optoutprescreen.com, and I can actually put it in the chat here. And you guys can put in your information. So it's going to ask for your full name, your address, and then the last four of your social. And you can select if you want to opt out for 5 years or permanently. Let's say that you say, I don't want to deal with this permanently. I just don't want it. But then in, I don't know, a year or two, you're like, I feel good about my credit score now. I want to see what offers I can get. You guys can go back into this website, put in your information once again, and opt back in. And then you will start getting all these pre-screens again, okay? But it is a good option in case you guys don't like junk mail and don't want to deal with it. Awesome. So as stated, Your credit history can affect your access to credit, loans, jobs, housing, insurance, and other important services. So please know that understanding your rights helps you know how to protect your credit history. So with that being said, we're going to move on to what's really important, credit scores, and understanding exactly how that works. So the key takeaway for this particular portion of today is that you can take steps to improve and manage your credit scores. This includes paying your bills on time and as agreed. This is going to be the number one thing that you always want to take care of if you are working towards either maintaining a good credit score or obtaining a good credit score. Okay. So the basics of credit scoring. The number is calculated from information in your credit reports. That's why it's always important not only to just look at your credit score, but also look at the actual report. I know a lot of financial banking institutions, if you have a credit card with them, in your statement, they will send you like on the little side, like, here's your credit score, right? That's great, but it's also important to understand what's on a report to make sure that it's accurate, to make sure that everything's good to go, and just understand how our actual score is being calculated. Generally, higher numbers equals better credit history. It also predicts likelihood of payment of credit obligations on time and as agreed. So there are two significant factors that affect your credit scores. One is whether you repay debts on time and as agreed, and two is your credit utilization rate. Okay. Before I go on to the next slide, does anybody know what is the golden rule when it comes to credit utilization? Like, how much of your available credit should you be using to try to aim for a good credit score?
130%?
Yeah. So it's 30% or below. Great. Yeah. So ideally, you always want to ensure that your credit utilization rate is at 30% or below. The lower, the better for us, but we always want to keep that 30% benchmark, okay? And this is based on your open accounts, which is another really important thing to know. So for example, if I only have one credit card with Chase for $1,000, that means that every time my statement closes and my balance is reported to the credit bureaus, I want to ensure that I'm at $300 or less of a balance, because $300 is 30% of that card, right? However, let's say I have 3 credit cards for $1,000 each. So in total, my credit limit is $3,000. That means 30% of those $3,000 is $900. So I want to make sure that every time my balances are being reported, our total balance is at $900 or less. Okay, so we can then decide, do I want to spend $900 on one card? Do I want to spend 300, 300, and 300 in between the 3? It doesn't really matter as long as it's 30% or less of your total. Okay. So more basics of credit scoring. There are multiple producers of credit scores. You likely have multiple credit scores. So there's credit scores depending on what you're trying to do. So there's a FICO score, there's a Vantage score, there's an Auto 8 score, there's one specifically for mortgages when we're trying to get a house. And this is all because depending on what we're trying to obtain, there's going to be certain things on our report that are going to have a little bit heavier weight than others. For example, if we're trying to go finance a car, the banks that we are trying to get a loan from, or the ones that we submit our credit to, we'll use what we call the Auto 8 score. Okay. So if we've had a car loan before and we paid it off, that's probably going to increase our credit score with them about 10 to 15 points. In comparison to someone who's a first-time buyer that's never been able to show, that has never paid off a car, they don't have the ability to show, hey, I had a loan for a car and I was good for it. I made my on-time payments and it was paid off. Okay. So this is the reason behind that. And with that being said, there's different models for different types of credit. Okay. But just for our general knowledge today, we are going to dive a little bit deeper into the 5 factors that go into the general FICO model. And this is just a good understanding of what really goes into our credit scores. Specifically, if we're trying to get a loan, a personal loan, a student loan, or if we're trying to get a credit card. Okay. So if we think about our credit score as a circle, there's 5 different factors that go into making the circle whole. 35% of that circle is our payment history. Okay. This is just saying if we're making at least our minimum payments on time, okay? This is going to be the number one factor that affects your score. So we always want to make sure that we're making at least our minimum payments on time, okay? The second biggest factor that goes into this circle is the amounts owed, which ironically is 30%. And that's a good baseline to know. You should always be at 30% utilization or less, okay? Again, the less of our utilization that we are at, the better for us, okay? Then we move on to a little bit smaller portions of the circle. 15% of our score is determined by the length of credit history. And this is actually the average of all of our open accounts, okay? So if we have a credit card that we've had open for 10 years, another one that we've had for 3, and another one that we had for 6 months, what will happen is they will add all this up and they will average it out, and that will be the length of credit history that you have, okay? Anything that's 4 years and below is considered baby credit. Anything that's 4 years and above is considered more mature credit, and that's just because you have a longer history of credit and hopefully being able to show that you are good for your word and you're good at paying your debt, okay? Again, all these factors are based on your open accounts. So, for example, let's say that you have a car loan, okay? And you've had your car loan for 6 years, you're about to pay it off, and that is the only piece of credit that's on your credit report. What happens once you pay off that car loan, you make your final payment, this gets reported, that account is now closed because there's no balance on it, right? So while many of us will be really happy and say, oh my gosh, my credit score is going to jump up, it's going to skyrocket because I just finished paying off this car loan, if there's nothing else on your report, unfortunately, that is not what's going to happen. Because once that car loan is closed, you have no open accounts to go into all of these factors. So you don't have anything to show your payment history. You don't have anything to show your amounts owed. You don't have anything to show the length of credit history. So it's really, really important that we are strategic when we are talking about credit and building our credit portfolio to ensure that we at least have one open account at all times. Specifically, if the only thing on our report is a car loan, we want to make sure we supplement by getting a credit card while that's open, so that once that car loan is closed, we still have our credit card that's open, so it can give us all of these factors, okay? With that being said, credit mix is about 10% of our circle, or 10% of what makes up our score. This just means what type of credit have we had under our name? Have we had a car loan? Have we had a credit card? Have we had a loan at some point? With this being said, I'm not saying to go crazy and go apply to all these different things. It's all about being strategic, but the reason why this does affect our score, and specifically more when we talk about bigger purchases, is because when we think about purchasing a home, when we think about purchasing a car, the creditors, the banks, the people that are going to give you this loan want to see, wow, Daisy was able to be responsible for this credit card that she has a limit of $1,000, but she also had a loan for $10,000 that she was able to pay off. So I feel more confident in giving her this $30,000 loan to get this car, okay? And last but not least, another 10% of this circle is what we call new credit. This just means, do we have any recently open accounts? With this being said, I'm not suggesting you open up credit every year, but it is a good rule of thumb to try to open up a new account at least once every 3 to 4 years. And again, this is just to kind of continue to put your name out there to say, okay, great, I'm taking care of what I need to do, what's already on my plate, but then I can also add a little bit extra, right? So maybe that includes getting a new credit card. One thing I do want to say with that is I do suggest that you all stay away from department store credit cards, okay? So when we talk about Macy's, Kohl's, TJ Maxx, Victoria's Secret, Home Depot, Lowe's, all these stores that offer you a credit card, I highly suggest staying away from them. There's a couple reasons for this. One, department store credit cards usually tend to have the highest interest between all credit cards available, okay? So that means that we are going to be having to repay them back more for using them because of the interest rate. Another reason to kind of stay away from them is because department store credit cards are meant to be used at that particular store, okay? So if we don't use it for a year, 6 months, typically what happens is that that card will be closed. So imagine you had a Home Depot credit card, right? You had it for 10 years and you kind of entered a new chapter in your life. You no longer go to Home Depot, you no longer need it, so you kind of just leave it there. Home Depot notices, and then 6 months later, they close it. That means those 10 years worth of payment history, those 10 years worth of credit history is no longer going to matter because that account's going to be closed, right? And last but not least, another reason to kind of stay away from department store credit cards and move more towards what I call universal credit cards. So credit cards with like a bank, Wells Fargo, Chase, American Express, Discover, Capital One, is because if we're ever in a stretch where, let's say, maybe our tire blew out, or we need groceries, but for whatever reason we don't have cash in our account, or we cannot cover it with our checking account, you cannot go to your mechanic and say, hey, my tire blew out, but actually I don't get paid till next week. Can I please pay you with my Victoria's Secret card? Or you can't go to Bonds and be like, oh my gosh, I thought I had $100 in my checking account, but I just looked at it. I only have 20. Can I pay the rest of my balance to get my groceries with my Lowe's card? They're going to say no, right? So we really want to make sure, again, being strategic about what kind of credit cards we do get, and aiming for more universal cards that you can use for anything, whether that be to go buy a new TV, whether that be to go get your car fixed, whether that be to pay your phone bill, whether that be to go get groceries, right? So typically what that's going to mean is with a bank, again, Capital One, Chase, Bank of America, Wells Fargo, your if you're with a credit union, so more universal cards that you can use across the boards. Okay. Now, understanding what goes into your score is one thing, but I think a lot of people have a question of what's considered a good score, right? So what is a good score? This is an example based, again, on the FICO model, okay? So an exceptional score usually is anything from 800 to 850. Here's where you have the golden star. You can get essentially anything that you will ever want. A very good score is considered anything from 740 to 799. A good score is considered anything from a 670 to a 739. A fair score is anything from a 580 to a 669. And then a poor score is anything usually from a 300 to a 579. Okay. Once again, the higher our score is, the better for us. Now, if we are in the poor, the fair, the good, there's ways to work on our credit score to be able to climb up the ladder. But once again, the important thing is going to be understanding what's on our report and why our score is where it's at, so that then we can start to see what is going to be the plan to go ahead and restart and recover so that I can have a better score. Okay. Awesome. So remember, the key takeaway from this particular section is you can take steps to improve and manage your credit scores. This includes paying your bills on time and as agreed, but also just really truly understanding what's on your report. All right. Okay, and for the last section of today, we are going to dive a little bit deeper into getting and understanding your credit reports and scores. So now we know what's on our report, why it's important, what makes up our report, but how can we get it? Key takeaway here is to get and review your credit reports at least once every 12 months to make sure the information is accurate. And I'm really, really going to stress this. It's at least once every 12 months. Once again, we want to make sure that what's being reported on our credit report is accurate, but also we want to make sure that everything is what it should be, okay? So that there's no wonky credit loan with, there's no wonky like loan with opportun that we never applied to, right? But now it's showing on our credit report. So again, bare minimum, once a year, it's really important to take the time to look at your actual report, not just your credit score, but the actual report. Now, if you can do it more frequently, better, okay? Because it's always going to be easier to catch things that shouldn't be on there. All right, so we do have right to free credit reports, and there's multiple places that you can get your report for free. You can get it from the 3 credit bureaus, so Experian, Equifax, and TransUnion, okay? You can also get it from a great website that I truly love, Credit Karma. Credit Karma gives you access to 2 of these 3 credit bureaus. So through Credit Karma, which is a free website, you can get your TransUnion and your Equifax report and scores. Okay, again, it's completely free. You can get it here. You can kind of decide how you want to go about it. You can also get a free report from all three bureaus from annualcreditreport.com. This official website is used to fill orders for these free credit reports. A good thing to know about annualcreditreport.com is that whether you have a social security number or an ITIN number, you can get your reports here. Unfortunately, if we go through the actual credit bureau websites or Credit Karma, you do have to have a social to be able to get your reports. But annualcreditreport.com is great because you can access your reports whether you have a social or an ITIN. Okay. All right. We also have the right to additional free credit reports in the event that we receive public assistance. So we can go to any of the offices and ask for a free credit report. They can then provide it for us. If we are unemployed and are looking for a job, we can go to the unemployment office, call unemployment office, and receive a free credit report. If we are a victim of identity theft or financial fraud, we have access to a free credit report. If the state law provides for a free credit report, I threw this in here because during COVID, something that happened is annual credit report typically only gives you access to one free credit report from each bureau once a year. However, after COVID, they are now giving it every month. So you can go to annualcreditreport.com and get a report from each bureau for free every month. Okay. Also, if we are denied credit, service, an apartment, or employment, if we ask for a copy of the report and score that they use to determine this, they are to give it to us. So if I go to Toyota and I apply for a car and they come back and they say, Daisy, sorry, unfortunately, Toyota Financial and all the other banks that we work with denied your application. We cannot not give you this car loan. I can ask them to give me the report with the score that they use to determine this, and they are to provide that to us. Okay. So what sections are in our credit reports? Once again, it's personal or identifying information, public records, accounts assigned or sold. So this means any collection, credit accounts, and inquiries that we may have. Okay. So with that, that kind of wraps up our actual financial literacy class for today. But I do want to take the time to talk to you guys a little bit about SparkPoint OC. So SparkPoint is a free financial empowerment program in which the main goal of the program is to be able to help you become more financially stable. Okay. So in order to do this, we do a couple different things, and there's actually 2 different models to this program. We have a 12-week model. So, and I'm actually the financial case manager for that particular model, in which I work with you for 3 months. And then we also have a 12-month model in which you work with a financial case manager for a year. You can decide whether you would like to take the 12-week, the 12-month. You can also decide if you would like to do the 12-week, kind of just dip your toes, see what you would be getting into, and then go on to continue into the 12-month. But through our program, you do get free one-on-one financial coaching sessions. So they will be individualized, and we will make a budget, a plan specifically for you, for your needs, and for your financial situation, and to also be able to help you meet whatever financial goals you may have. Okay. You will also have access to financial literacy classes just like today. So I do teach some of them. We also have a financial educator. Her name is Cecilia. She teaches them as well. And we will be able to explore not only credit report and credit scores, but also a lot of other financial topics such as budgeting, savings, the importance of making smart financial goals. So things to really just give you that knowledge, right? Knowledge is power. So we really want to make sure that you guys have the financial knowledge so that you guys can continue to make educated financial decisions in the long run. And you will also have access to additional resources. So we have been lucky enough to create partnerships, just like the one that we have started with CIELO, with other nonprofit organizations, with family resource centers, with other people in our community that we can go ahead and refer you over for additional resources. That can include anything from food banks to diapers to basic needs to transportation needs, stuff like that. And again, we take a big approach on holistically being able to help you. So while we do focus on your financial empowerment and financial growth, we will be able to dive in a little bit into your overall well-being so that we can help connect you to resources to be able to help you. Okay, so if you guys are interested in joining SparkPoint, you guys can either email me at sparkpoint@unitedwayoc.org. This is our official email, which I take care of, and we can take care of that referral. If not, you can also talk to Alex or Eric, and they will be more than happy to point you over, send over your information, and then we can get into contact. But that is all I have for you guys. So I'll go ahead and stop sharing my screen so that we can answer any questions.
This was great. Thank you, Daisy. Wow, I even learned something new today. We do have a few questions in the chat. So I'll just start off with some of those, and then we can move on to some other questions. But one of the first questions, Jackie asks, she recently bought a house and her credit score went down. Do you have any input in that?
Yeah, so typically whenever we make a big purchase, such as a car or a home, because we are taking on a big debt, our score will take a hit. Again, it's because our utilization is going to skyrocket, right? So we have a home loan and auto loan. Our debt to income ratio is going to be a lot higher than the 30%. But as you start to make your payments, you will see your score continue to go back up. And a lot of people tend to say that buying a home is how you get to your golden 850. So as long as you take care of what you need to take care of and make your payments on time, your score will go up.
Amazing. Thank you. And then she had a second question, which is how do we build our FICO score?
Yeah. So keeping in mind the 5 factors that we talked about, I would always recommend keeping on top of making your payments on time. So at least your minimum payments on time and your utilization. So those 2 factors alone are 65% of your score makeup. So if we take care of those 2, that's going to be the best way to get your score to go up. The length of credit history is something that kind of takes care of its own once you start cultivating those open accounts, right? And I'm actually going to share a secret that a lot of people don't know. I guess it's kind of like a loophole, but have any of you guys ever heard of an authorized user or becoming an authorized user on somebody's account? Yeah. Okay. So that's kind of a loophole to help you if you do it correctly. So it's really, really important if you are going to become an authorized user on someone's accounts, on someone's credit card. You have to ensure that this person is a responsible person, meaning they have never made a late payment on this account, meaning that they don't use more than 30% of this credit card. So if their limit is $1,000, that they don't use more than $300 on this credit card. Because essentially what happens is this person can do it online or call that particular bank for that credit card and say, hey, I want to add someone to my account as an authorized user. They will then give your information, so your name, your social security, your address. You will then be put onto this account, which means that all of the credit history with this particular account will then transfer over to your name. Okay, this can help your credit score go up as well if the account has been open for at least a year, if it's in good standing, it's never been late, this person's not going to make a late payment. Because let's say that I put Eric on my Bank of America account, right? I've never made a late payment. I always spend less than 30% of my available credit limit. But next month, I can't work. I'm self-employed and I have to use my credit card, and I rank it up to $900 out of the $1,000 limit. And then the month after that, I'm still not working and I miss a payment. Not only is my credit score going to go down, but so is Eric's, because all that negative information is going to be transferred to his credit, right? So it's kind of a loophole to be able to help you, but it also has to be strategically done in terms of who's putting you as an authorized user. Or if you decide to put someone as an authorized user on your account, just make sure to know that everything you do is also going to affect them. And this is actually a loophole that I see. I tell a lot of my clients who are parents to do. So I have a 2-year-old son. He's on all of my accounts. So by the time he's 18, he should be golden, right? And it's going to be up to him to continue that with his own stuff. But that's something good to know as well.
Amazing. Thank you, Daisy. And then do we have any other questions? I think the authorized user is a super cheat
I
code.
have,
So
I have a question. Can you hear me, Daisy?
yeah, we can hear you, Jessica.
Okay, great. Okay, great. I had a couple questions. Number one, thank you so much. This is so great. I wanted to know do your services, is it just for Orange County or is it open to LA County residents?
Great question. So unfortunately, right now it's only Orange County. I can definitely see if there's anything similar for LA County, but for right now, yeah, it's only Orange County. We are
Orange
working
County.
on hopefully expanding, but that's just kind of still in the works as of now.
Okay, that's great to know. And do you have to have a certain income to participate in your program?
No.
So it's for all.
Mhm.
Nice.
As long as you're an Orange County resident.
Okay. And then my last question, I wanted to know, what universal credit card do you recommend? Or I know this is, everyone has different opinions, but from your experience, what is a universal credit card you feel we can look into more?
Definitely, I would say start off with your banking institution.
Your bank.
Even more if you are with the credit union. So like Schools First, Navy Federal, credit unions are, I always tell people credit unions are for the people, right? Banks at the end of the day are trying to make a profit. So
Yeah.
your interest rates might be a little higher compared to your credit union. But the reason why I suggest starting with your banking institution, whether that be a credit union or an actual bank, is
Mhm.
because ideally you already have an established relationship with them, right? So you have a checking account with them, you have a savings account with them. So when you go to them and try to get a credit card, it's going to be a lot easier for you to get approved because you've established that rapport.
Okay.
In addition to that, Capital One and Discover are really, really good.
Okay.
Yeah. Also, they're good for people whether you have a social security or an ITIN number, and more if this is your first card. So another quick thing is there is a difference between a secured credit card and an unsecured or universal traditional credit card. A secured credit card is a card you apply to it just like you would any other card. However, when you get approved, you will then get a response saying you can pick your credit limit. And usually it ranges from $100 to $500. What's key here is that the limit that you choose, you are then going to authorize that banking institution to take that money out of your checking account. So let's say I apply for a secured credit card with Capital One, I get approved, and I decide that I want my limit to be $200. Capital One will then be like, great, we need your checking information. They will pull $200 out of my checking account, send me that credit card, and then I will be able to use that credit card like normal. I will use it, pay it off monthly, use it, pay it off monthly. And typically what happens after about 6 months of making on-time payments, Capital One will then turn and say, great, Daisy, we now trust you. We know that you're good for your word in paying us. They will return those $200 back into my account, and that card will become your more traditional universal card. And usually what happens as well is they will increase your limit. So a secured card is really, really something I recommend for someone that's trying to start up their credit.
Thank you.
Awesome.
I have a question.
Yeah.
The program SparkPoint, it's the one that you present on different school districts, like Magnolia, Anaheim, and things like that.
Yes. So we have a total of 8 different SparkPoint sites throughout Orange County. Some of them are in schools. And then some of them are hybrid. So for example, the one that I oversee is actually the 12-week program. And that one is completely virtual. So all of our meetings will be virtual. All the financial literacy classes, there's a total of 8 that I teach through the program will be virtual just like today. But correct. Yeah, you probably heard of us in a school district.
Yeah, I took one like maybe 8 or 9 years ago at the Magnolia School District. If you took that one once, even if it's years ago, can you take it again or you're not allowed to?
Unfortunately, it is a one-time thing. If you took the 12-month program, then that is it. But you can enroll in the 12-week program with me. So if that's something you're interested in, you can send me over your information and then I can help you with that. With the 12-week program, because it is a shorter program, we do enroll clients on a cohort basis. So every 12 weeks, we are enrolling clients. So for right now, the next time we will open up again will be in January. But you're more than welcome to put yourself on our interest list, and then I will reach out to you once that becomes available.
Thank you.
I have a question.
Yeah.
I'm sorry. Did I jump someone? I don't mean to, but my son put me on his Discover card because he had really good credit, and then I got a Discover card, and then he stopped working, and then his Discover card went up, and he's, you know, almost to his limit, and so it's affected me. Can he take me off of his credit card?
Yes,
Like, yeah.
yes, he can. He can remove you, and I would actually suggest removing you.
Yeah.
For now, because once again, as you can testify, when it was good, it was great, right? It helped you with your score, but now that he's kind of hit a bump in the road, it's affecting your score. So I would just suggest him calling to remove you, and then that is done and taken care of, and especially now that you have your own Discover account, and you know, hopefully you are taking care of that. Then it will only reflect your score will only reflect that information.
Perfect. And then the last thing is, I mean, if you have a lot of credit cards, but you're paying on time, is that better or worse? I mean, I don't know. I don't want to close any, because my friend said when you close credit cards, that affects your credit score as well.
Yeah, so definitely don't close any accounts. Don't do that, because that's going to affect your overall credit availability. So let's say you have 3 credit cards and your utilization is at 30%, but then you call and you're like, I don't use this Wells Fargo card, or I don't use this Macy's card. You call and you cancel it, and it had a limit of $1,000. Your overall credit limit is going to decrease by $1,000. So your utilization is going to go up, right? So instead of being 30%, maybe it's going to be 45, 50%. So that's going to affect your score. So definitely don't ever close credit cards. However, one thing that I would suggest is, once again, just being strategic about the type of cards that we're getting, and also just keeping in mind that we never really want to spend over 30% of each card. So it just makes it easier for us to stay on top, whether we're making minimum payments or paying a little bit more than that.
Good. I thank you for that. And then another friend told me, always be on auto pay and then pay an extra payment. Do you suggest that?
Yes, if you are someone that tends to forget stuff, because whenever you make a late payment, you are hit with a late fee, right? So you always want to make sure that at bare minimum you are covered and you're making your minimum payments. But of course, if you can pay a little bit more, then I definitely do suggest paying a little bit more. Not only is that going to help with your utilization, but also it's going to help with how much you're really paying back, because your interest percentage is off of your balance. So if you are someone that tends to forget, auto pay is always something that I recommend.
Yeah, they were saying that being on auto pay, but then making a second payment 2 weeks later helps your score. So I don't know. I've done that.
That's a common misconception. A lot of people do tend to say that. But what I always say is, if you can pay more, it doesn't really matter if you have it on auto pay and then make a second payment. What's going to matter is the balance that's being reported to the credit agencies.
Okay, great. Thank you so much. This was great. I appreciate it.
Yeah, of course.
Awesome. So we're close to ending time. We'll take one more question.
Yeah, I don't have a question, I just have a comment. So
Go ahead, Jason.
Just to kind of give you an example of how important it is, when Daisy was talking about the when you have like your identifying information. So real quick, June 24th of 2020, my credit score was 420. I couldn't get a piece of candy on credit. So I started looking at my credit report, and I had like different addresses I lived at, different telephone numbers, different variations of my name. And I worked strategically to get all these things off my credit report. And once I did that, it probably took me about a year. My credit score went from 420 to 625 in that period of time. So it's important addresses, telephone numbers, all that stuff was important. And then on my credit score, I started paying stuff off to the point where I had no credit. So they couldn't even, I had nothing on my credit report. So I got a Credit One credit card. And so that really helped. So just wanted to stress the importance of your identifying information is super important.
Yeah, thank you for sharing, Jason, and I'm glad you were able to take care of that. So again, really, really important, bare minimum once a year. If we can do it more often, please check your reports more often, not only your score, but also your reports. Unfortunately, identity theft is something that's been going around for a long time, but we've actually seen an increase in it after COVID. So be careful.
Amazing. Thank you, Jason. And yeah, and that is all for today. Thank you for joining us in this insightful introduction to credit. I hope all you have gained some valuable insights into credit. I myself did, and so very happy to be here. And yeah, as a reminder, we'll be sending out the recording of this info session. Additionally, I put Daisy's contact information in the chat, so feel free to get it from there. And if not, you can reach out to us and we'll connect you with Daisy. Once again, thank you so much, Daisy. This was a great workshop and I'm sure a lot of people benefited from it. So thank you once again.
Awesome. Thank you guys for having us, or me.
Thank you, Daisy.
Awesome. Well, have a great evening, everyone. And I hope you all have a fantastic dinner.
Thank you. Great job, team. Bye, Daisy.